Good morning, folks. Let's talk about natural gas. And with the COT report kind of undecided and a bit of a mixed picture, we'll have a look at that shortly. And also the COT report index over here from marketbulls.com shows that we're at 51%, so roughly right in the middle, betwixt and between. This is an interesting index from Market Bulls. I've just come across it fairly recently, and I'm still not 100% sure exactly what it's measuring. I've got the formula, not just for natural gas, but for a whole wide variety of futures markets. So a very interesting site, which we'll come back to in another video. Looking at the COT report, kind of mixed and in betwixt and between. So where are we going on the prices? Let's have a look. Well, this is the first. I had to record this after recording the main part of the video. I forgot to talk about the weather. But just to add to what we're talking about on the COT report, in betwixt and between, and the weather's sort of looking the same way. Not particularly bullish or bearish, I don't think. Those who are more involved in the weather forecasts and understand this a little bit better might be able to comment, and I'd be interested to hear what you've got to say. Let's get back to the report. We've got commercials with historically large long positions, but also very large short positions, adding more to the long side. Producers 207 long, 238 short, so roughly balanced, adding more to the long side though. Managed money, taking off the long side, adding to the short side. Now that's quite indicative of what might be going on. These are trend followers, bear in mind, so whatever they do tends to be algorithm driven and sometimes a little late to the party, and maybe that's what we're seeing showing up here. Non-commercials 235 long and more to the short side, adding more to the short side. Swap dealers 177 long, but only 40 to the short side. But remember, swap dealers are often hedgers, so these will be in the direction that they expect the market not to go in, and that's long. And then other reportables, that's you and me, retail traders, 41 long and 214 short, so much more weighted to the short side, but actually trying to swing to the long side. So they tend to be bottom pickers and top pickers. That's people like you and me. Let's go to the charts. So not to waste too much time, there's our position. I published this on X and in my private group and on YouTube in the last video. So we're short at the red arrow, just around $4.15, and we're currently trading at $3.97. So we have a decent profit on this trade already. We are at order block support, but we're below all of the moving averages, just peeping above the 50 right now as I speak, But we have the 20, 100, and 200 well above us, and we're at the bottom of this order block, as I said. There's another order block further down below. I'll link the last video yesterday to this one so you can have a look at my other comments on natural gas. But basically, we're aiming for 375. That's the bottom of this order block and where the trend line is, the one that we've broken out of. We're still bullish according to this one trend line, by the way. Keep that in mind. We're not out of the woods yet. So we could get back down to the trend line, retest it from the top and bounce off. But more likely, I think we'll retest this level at 375, eventually break below there. Maybe not before a bit more bouncing around and a bit of jiggery pokery at this level. And then after that, I expect to move down to $3, the big round number, significant level, and there's a rising trend line. Let's have a look at the day chart just to clarify this a little bit better. So there we are trading in and around the $4 level. There's the 375 level, which is very, very key. I'm going to highlight that with this black line. In fact, let's make this one red because it is a key level. And a break below there and a close below there, remembering that's the trend line I was referring to earlier, which we may bounce off. We haven't retested it once yet, so we've had the breakout, no retest. So it's going to be a super important level, 375. If we don't manage to break below there, we may actually experience quite a significant rally. But if we do, we should move down to the 100 and then eventually down to the $3 level down here, which now also coincides with the 200-day moving average and this rising longer-term trend line. That's this one over here. So that's the overall plan. We're still waiting for this to break down below the current level down to about 375. We may consider hedging some or all of our position down there if we get down there. It's a big double bottom and it may well hold on the third attempt. We don't know that just yet. If we do manage to break down through 375, then around about $3.40 is the next level. And then of course the big round number 3. As I said in my previous video, the two key levels on this chart right now, and it's shown by the way we've traded, are 375 and $3. And once again, if we break below $3, there's quite a long way down to the next support level, down into these order blocks, and maybe even further down towards the $2.25 to $2.50 level. Let's go back to the 4-hour chart, have a quick look before we close off this video. So expect some faffing around here during the day into the New York session. Maybe a peak up to the 200-day moving average and the 20 and the 100 right here in confluence and the top of the order block, and then a resumption of the trend down, first of all to 375, and then, as I said, down to about 350, 344. If we can get through all of that, there's not a lot of volume in this region, so we could fall down through there pretty quickly, down to the $3 level, and of course we'll exit this trade if we get that far, and then consider what to do next. So this weekend on Sunday at 8 a.m. Eastern Time, New York, I'm releasing my natural gas trading course. Make sure you click on one of the links below, get onto the early bird list. There's a $100 discount for those on the early bird list on the day of release, on the launch day. That's Sunday, the 6th of April, this coming Sunday, 8 o'clock New York time, and I hope to meet you inside. Take care.
Market trade all day. Wake up, coffee hot, laptops humming, Dow Jones jamming, NASDAQ strumming. I'm riding that trend, watching it climb, snatching them pips in rhythm and rhyme. Mad cross, RSA tight. This funk don't stop, it's a trader's delight. Scalping those ticks, riding that wave. Pip by pip, we're digging the grave.
Funky pips, stacking high.